Hey guys, welcome back. In today's video, we are talking about how shorts are borrowing money, how they are buying, the payouts, and many more in this video. First, we're taking a look at this. Virtue Financial reported and I want to make it correct, 6.335 billion of financial instruments sold, not yet purchased in the quarter ended September 30th, 2024. So in the actual filing, you guys can see here 6.335 billion. So it was a typo here, which Squeezy obviously addressed about it. Now, this is the interesting thing. So something about Virtue is that we knew they were a short seller of AMC and GME. We knew that they were very vocal about it. Now, what we've also known is that later throughout the years, it seemingly looks like their short positions have continued to increase. However, what's seemingly going down is their revenue, is their profit. And so what we can see is how the short positions are eating into them. Now, recently, they took up another loan, but something that I want to talk about first is how hedge funds and market makers are sending GME and AMC both sides, only to make you believe one is better than the other and to take advantages of those gaps switching from one to another one. Wait until they move together. And the reason why I say this is because just like we talked about here, the increase of Virtue's short positions shows, and again, understanding that they are shorting both AMC and GME means that they are affected by both. So it isn't the case of one is better than the other. When we understand the short sellers, the main short sellers are shorting both AMC and GME. And we can see that they're struggling with this because if we take a look at over here, one of the big banks could be left holding the bag if things go south at Virtue. So Virtue Financial has entered into two separate secured credit agreements with financial institutions to finance up to $1.05 billion of overnight securities purchase in connection with its US broker deal market making business. So the TLDR is that they have agreed with the bank to borrow up to $1 billion in order to finance the purchasing of securities overnight to manage liquidity and maintain its trading operations of its market making in connection with its broker dealer arm. So this is where things starts to get interesting. We know that Virtue has already took up loans in the past before. They especially needed these loans because, again, we talked about the revenues going down, their profits is going down, their cash is going down, but their short positions are going up. So we knew that they were obviously losing a lot of capital. Now, this is further showcasing this as they borrow another, and this is up to, and I want to make it very, very clear, is that they haven't borrowed just $1 billion, but the ability of up to $1 billion. So it could range from 100 million all the way up to $1 billion. Like I said, this is what we have to understand. But we can see how this is already obviously adding on top of all the money they've already borrowed in the past. Now, given how the performance is very likely, and what we could be seeing is that going into the near future, this $1 billion, if they were to borrow up to $1 billion, obviously get liquidated, get a margin call, and then what we're going to be seeing is how banks could be left holding the bag. But remember, they are always and also shorting AMC and GME as well. So that will also be a position that get liquidated. Now, let's take a look at this. GME, all these institutions buying in makes me suspicious about their intentions. Some used to short GME. Are they still short and hiding it in swaps or offshore so they don't have to report it? One thing I've learned during the last 4 years, don't trust anybody and don't take anything at face value or for granted. Always look for the motive behind. Now, before we go further on, you can see how this relates to what we talked about here, how they're trying, what we talked about with how they're trying to send GME and AMC both sides. And this is what we said, with a motive behind it, because we know that they're both shorting both GME and AMC. And you can see how they always try and give the wrong idea. Now, bear in mind, institutions have been buying into AMC as well. What's different is the ones that are buying into GME right now. You can see this. Susquehanna has increased their holding by 158.06% in the third quarter. Now, some of the recent moves from other institutions have been BlackRock, which we talked about, Vanguard, which we talked about, both bought into AMC as well. The people that are interesting is Citadel, Jane Street, and Susquehanna. Now, we talked about Susquehanna. Citadel is something that everyone should obviously know. One of the main short sellers of AMC and GME, one of the market makers, someone that's obviously constantly been suppressing and manipulating the price of both stocks, have just increased their position in GME, or at least back in Q2 of 2024, with over 1.8 million shares, which is an increase of 2,334%. So it's very interesting that these shorts are buying into GME. They've also bought into AMC like we talked about in the past before. Now, what is the intention behind it? Is it a good thing or is it a bad thing? And this has got to do with the payout, which I want to talk about later on in this video. And what I want to further talk about is understanding, like we talked about here, the record institutions buying GME. And this is relating to what we've talked about. You can see BlackRock, Vanguard, Geode, and other notable institutions. And so this is what we talked about. They've all increased their positions. And another one is Renaissance Technologies, how they've actually boosted the GameStop shares with over 40%. This is a company that have also recently increased their investments in AMC as well. You can notice how the trend has been going. A lot of institutions have been increasing their position in AMC, then into GME. And so this isn't talking about AMC's better than GME. Like I said, they are both equally in the same positions. But this is understanding how institutions are buying into both stocks, yet they want to make you think differently of the two stocks when institutions are buying into both. Now, it isn't a surprise that they are obviously buying in, and again, something would make sense of all of these dark pool orders that are coming in for GME, now that we see how institutions are obviously increasing in their position. But this has got to do with the buyouts, and this is what I want to talk about. So the reason institutions have massively increased their stake in GME is because they are about to pay out the apes. The way a payout works is a major institution buys out the entire order book overnight and close out their short positions that are hidden in ETFs and overseas. We just witnessed this with GME back in April when the GME price went from $15 to $18 overnight. A major institution paid out the bad trades. The problem for institutions is that there are many institutions that are still in this trade and need to get out now. Today, every ape that needs to sell GME has to go on the show to do so for up to $80. Needless to say, the apes that haven't yet sold are all waiting for all-time highs, meaning all-time highs where all the GME liquidity dies. Wall Street institutions understand this, therefore in propositions for all-time highs, they're buying up mass amounts of GME shares today in order to try to control the markets once we reach all-time highs, or else they will collapse. So this could explain to why they are buying. Now, I want to make it very clear is that different institutions have, of course, different intentions of buying. When we take a look at here, Renaissance buying to GME, that's because they understand the alpha there is with GME, they understand the potential there is with AMC, and they're trying to obviously make a gain because they know that there is investment opportunities. And like we talked about, the fundamentals of AMC clearly reflects and showcases that. Now, when we go back to here and understand, what other institutions such as Susquehanna, such as Citadel, the reason why they're buying into this is what we can talk about here, the payout. And there's clearly a reason. It could be that they are buying into more shares because they need to create more IOUs. They need more real shares to create synthetics. They need to obviously try and make it look like they can settle shares. There are obviously many reasons, but it also relates to what we talked about here with the payout. Now, there is something that I do disagree, or rather I want to give my own opinions on. Is understanding, firstly, talking about when GME goes to all-time high, will liquidity lies? And of course that's the case. And what we have to understand is that it's obviously going to be a dominoes effect, and it's understanding that they will try to control the MOAs because they will collapse, but it's very likely that they will, of course, fail to do so because it isn't just one institution that are involved, it's many. And the way that it has gone up until now, the fact that they have prolonged this process for so long, it's understanding that not just institutions such as these hedge funds are involved, but massive institutions as well, like banks who are lending on the money, are also involved. And furthermore, going on, let's take a look at a big thing. So Nvidia. Now, we can see that Renaissance has cut their stakes in Nvidia, and you can see there's clearly a reason to do so. Like we talked about, the reason behind Renaissance buying into AMC and GME is because they see the opportunity. It isn't because they need to create synthetics, it's because they see opportunities. And this reflects with them cutting their Nvidia shares because they understand that the opportunity, the potential has run out for Nvidia. But what we can also understand is that if we were to see the start of the fail of Nvidia, the collapse of Nvidia, what we can be seeing is massive amounts of asset value of asset collaterals start to all disappear in the market. Now, like we talked about, one of the biggest reasons for why shorts have had the ability to have so much money, especially this year, is because of the fact that Nvidia has risen so much. And again, it has obviously boosted the stocks of many others. But if we were to see the whole market collapse and all of these value go down, that would mean a massive decrease in their value. And therefore, these short sellers will run out of money and will have to cover their shares. Anyway, guys, thanks for watching. I'll catch you guys next time.